Have you ever wondered what a mortgage payment is actually made of? Well, there's 4 critical components that you need to understand about a mortgage payment. And not understanding those components can leave you in a bind. So today we'll be covering those 4 components of a mortgage payment in detail. And make sure to stay to the end because I have a special gift for you that will let you know exactly your mortgage payment down to the penny. Hey, welcome to the DFW Homeowner YouTube channel where we cover everything you need to know about DFW real estate. All right, so let's dig in. Every single mortgage payment is comprised of 4 different components. You have the principal, which means how much you owe. You have the interest, which means how much you're paying on that loan. You have the home insurance, which protects your home against catastrophe. And you have property taxes, which is what you pay every single year in taxes for owning a property. Now that's just the basics. Let's go a little bit deeper. Let's really have a comprehensive look at what a mortgage payment is and what to expect. Because this is something that I wish I would have known before I purchased my first property. All right, so you have the principal, which essentially means how much you take out as a loan. And of course, there's a lot of variables that you have to factor in here when you're talking about the amount of loan that you're taking out. With the principal, you're keeping in consideration how much the property actually costs. In other words, how much you're paying for a property. You're also looking at how much down you're gonna put on the property, because the more that you put down on a property, the less the principal that you're going to owe. It just makes perfect sense. However, something you want to take into consideration is that down payment. Because if you put anything less than 20% down on the property, then you're paying additional interest on that property. Now, something else to understand when it comes to your principal is that as you're making payments on your loan, the principal is going down. However, it's not going down as fast as you might think, because at the beginning of the loan, you're going to find that you're paying a lot more in interest than you're actually paying towards the principal. So what I encourage you to do, if you have the financial means, to make one additional payment every single year. So instead of you making 12 mortgage payments that year, you're making 13 mortgage payments that year, which as you do this with time, your principal is gonna start going down a lot quicker. So much so that a 30-year loan actually gets paid down in about 25 years. That's how powerful the strategy is, and that's how powerful the understanding of what the principal is and how to actually manipulate it to your benefit. So again, this number is gonna go down with every single payment. But now let's talk about the second component to your mortgage payment, which is the interest. At this point in time, most mortgages are on a fixed interest, which is radically different than what we were doing with the financial crash in 2008, which most of those loans were adjustable rate mortgages, meaning that those interest rates could go up or down, they weren't fixed. And as you can see, the 30-year fixed mortgage rates have been all over the board over the years, where they peaked in the 1980s when the interest rate surpassed 18%. And they dipped all the way down to 2 to 4% in recent years. And while you see the graph go up and down, for you, it doesn't matter. It only mattered when you got into that particular loan. So the interest isn't gonna be the reason that your payment goes up or down, which brings us to the next component, which is the home insurance cost. If you get a loan, the bank is gonna require that you have home insurance. It's not until you own the house outright that you can decide if you wanna carry home insurance or not. Then it's up to you. If you wanna save a couple $100s per month, which I don't advise by the way, you don't have to have home insurance. But do know that if it hails, that you're replacing the entire roof on your dime. If a $2 pipe bursts in your home and floods the entire house, that's also on your dime as well. So again, once you own your home outright, just be mindful of that if you're considering not having home insurance. But again, as long as you have a loan, you are paying for home insurance. And this expense can go up or down. 99% of the time, it's gonna go up. It's gonna be super rare that your home insurance cost actually goes down. Now we get to the 4th component of your mortgage payment, which is property taxes. This is actually the biggest reason that you're gonna have a jump in your mortgage payment every single year, especially in a market where real estate prices continue to climb upward. Because property taxes happen every single year, essentially you're paying something in property taxes. And again, if you're in a hot real estate market where prices continue to go up, so will your assessed value on your property, which that assessed value is what the county appraisal district uses to know how much taxes to charge you. As an example, here in the DFW Metroplex, property taxes can vary from 1.5% all the way up to 3%. That means that every single year you're paying 2 to 3% of the assessed value of your home. So it's not uncommon in a hot real estate market, which the DFW real estate market happens to be, to live in a home or have a home that's $400,000 one year and the next year it's worth $440,000, and then $470,000, and then $520,000, and onward. So as you can imagine, the assessed value of the home continues to climb, and you're paying taxes on that. So you're not paying any more in principal, you're not paying any more in interest rate. Your home insurance might go up slightly, but certainly not that much. It's actually your property taxes that cause your mortgage payment to rise so quickly, which means that it's absolutely vital that you protest your property taxes every single year. And if you need my template that's helped hundreds and hundreds and hundreds of homeowners successfully protest their property taxes, then go ahead and comment protest down below and email me at admin@JaimeResendiz.com. Join the hundreds of homeowners that have saved thousands upon thousands upon thousands using that same template. All right, so those are the 4 components to your mortgage payment. Those are the standard, those are the absolute musts, but there are some additional costs to consider. So as an example, if you get an FHA loan and you put 5% down, then you're paying an additional percentage or an additional premium in the form of MIP. Now, if you got a conventional loan, again, if you didn't put 20% down on that conventional loan, you're paying what's called PMI, which stands for private mortgage insurance. So if you paid less than 20% down, then consider this an additional cost to your mortgage. But if you put 20% down and above, then don't even worry about these. Now, another thing that might not factor directly into your mortgage payment, but will factor into your overall cost of home ownership is a homeowners association. The majority of the homes that are being built today do fall within an HOA, a homeowners association. And those fees can vary all across the board. They could be a couple hundred per year, or it could be thousands upon thousands upon thousands every single year. So again, while you may not be paying that in your mortgage payment every single month, at some point you do have to pay your HOA dues. Now, of course, there's additional cost to home ownership, such as home maintenance, taking care of the pool, taking care of the lawn, all that other stuff. We're not going to factor that in here, but just also be mindful of that. There's some additional costs that you didn't have to incur if you're renting or if you were in an apartment before. All right, so I promised you a tool that will let you know how much your mortgage payment is down to the very penny. So if you comment mortgage down below, I'll gladly get that out to you. Now, if you found value in this video, don't forget to like and subscribe and turn on that notification bell so you know when I upload next. And if you want to see exactly how to save money on your next home purchase, check out this video right here.